Hello, class. I wanted to do a quick screencast for you just to kind of recap our class and show you what your grades were in the stock market game, your final rankings in the stock market game. Um, just as a reminder, there is no class on Monday. I apologize, but my schedule is not going to. I won't be back in time. I won't be able to be here in for class on Monday, so I wanted to do this little recording for you just to kind of recap. If you remember, we started the stock market game on September 17th, the first day of class. And the Dow Jones Industrial 30 on September 17th was at 26,152. And then we ended the game on December 14th, this last Friday, and it dropped to 24,100. So that's actually a 7.8% decrease in the stock market in the Dow 30. Now, the good thing is the class average portfolio only went down. It went from 100,000 to about 98,000 something. So it went down by 1,969 points. So on average, for our class, our total portfolios only went down by 2%, which is really good. We actually beat the Dow Jones Industrial Average, that index, which means we were more educated, we were more strategic with our stock trades. So like it says down here, our class on average beat the market. Now here are the results. Now, as I mentioned, because there was some issues with the stock market game and some delays, the top 9 students, so the top 20% actually got extra credit. So they got 27 out of 25 points. Christian came in first, then Tyler, then Sarah, then Mitch, Chad, Joseph, Evan, Clay, and Michael did really well. They're in the top 20% of the class. He got 27 points. And then you can see the next groups got 26.5 points. And then the next group got 26. And then from on down here is 26 points. Now I did take my name out of here. I didn't, even though about half the class actually beat me. And then you can see 25.5 points, and the lowest group ended up getting 25 points. So that's the grades for the stock market game. Now, just as a reminder, there are risks in investing in the stock market. Basically, during this last semester, we were doing day trading. You guys were trading very emotionally driven trades. Didn't really have a strategy. You were just kind of, reacting to what the market was doing. That's actually not a very good strategy to have. As you can tell, it was really difficult, and you got whipsawed around as the market went up and down because there was a lot of volatility this semester. But you need to recognize that there is risk, that you could lose all your investments in the stock market. There's market risk, there's economic risk, and inflation risk. And the stock market price it's a pure example of supply and demand. The more people want to buy a stock, the higher the price goes up. The more people that want to sell the stock, the higher the price goes down. So you just need to recognize that there are risks associated with investing in the stock market. But overall, historically, it has been the best long-term investment strategy, especially to buy and hold. But you need to be disciplined with a proven strategy. I like to use what's called a proactive educative strategy. We know we're in times of volatility right now. And a little bit of a correction going on. I think I mentioned that to you at the beginning of the semester, and so I don't totally go out of the stock market, but I reallocate my investments as on a percentage basis out of, say, the stock market into other things like bonds or fixed income or money market accounts. But you just need to have a proactive educative strategy and not be so driven by emotion and whims. And then finally, I showed you this slide on the very beginning, the very first day of classes. I think it is critical that you track your expenses, budget, pay tithes, and avoid debt. That is the foundation of being self-sufficient, of proper money management. And then you need to set aside some money for savings. And then if you have some extra money after that, then you can look at investments, like maybe stock market investment, bond investments, even commodities and things. That's kind of the pyramid. But then I have this sidebar here that the minute you start your first job and they have like either a 401k plan or a Roth 401k, you need to look at putting money aside for retirement. And that's usually in the equity markets. You can look at doing that once you get a job. You need to make sure you follow the profit, read the pamphlet, All is Safely Gathered In, Family Finances, make sure that you pay your tithes and offerings, avoid debt, and you use a budget. Track your expenses and use a budget. Read the pamphlet, One for the Money. providentliving.org. And then, of course, the first presidency letter, it's about 10 years ago. The first presidency letter basically states that we're concerned with some church members that ignore the direction to prepare and live within a budget, avoid consumer debt, and save against time of need. You need to make sure that we avoid debt and have a budget, because I do think we are heading into a period of uncertainty and possible corrections. There's a lot of economic issues and global issues that are causing some uncertainty and some concern. So you just need to make sure that you are self-sufficient and that you have a budget and avoid debt. Now, a couple last items. Just remember that the final exam closes on Wednesday at 10 a, not 10 a.m. That should be 10 p.m. Typo there. Sorry about that. It's in the testing center, and the doors in the testing center close at 9 p.m. Make sure you do the extra credit class survey. I just want to see how you felt about the class. If you have any questions about any grades, feel free to email me. I hope you have a wonderful Christmas break. Be safe. Enjoy your Christmas. And if I see you in the hallway and I try to remember your name, help me out. But I enjoyed having you in the class and it was a great semester. Thanks and Merry Christmas.